Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading, and welcome back to another weekly watch list video. If you notice, the background has changed. I'm having construction in the house, so I'm going to be put in different rooms as they make their way around the house. So it is Easter morning. So this is where I'm going to ask you guys to hit that thumbs up for the video. And if you're new, subscribe. We have new videos just about every single day. So let's get right into it because these videos are made specifically to prepare us for the week ahead. Towards the end, that's when I get into my picks for the week and what I see happening as far as that goes. So earnings for the week. This is a very big week, and it only gets bigger for the next week, okay? You have a ton of earnings, and I really think that this is going to be so key, even more so than ever, because you have a tightening cycle with the Fed, you have interest rates going up, and a lot of people want to revalue where these stocks should be. And the way to do that is to see what their earnings are, see what their projections are going to be. So this is going to be super important. 15% of the entire S&P reports next week, okay? The week after that, you have 48% of the S&P reporting. So, watch how the market reacts as these earnings come out. It's very important, to see where the market can potentially go. But just keep in mind, you have a massive amount of earnings in the next 2 weeks coming up. So that's the earnings there. Let's take a look at the economic calendar. Oops. This is the economic calendar for the week. Always be aware of the economic calendar. Cannot stress this enough. Last week with CPIs, you have NFPs when you have the payrolls. All these things can really move markets. Sometimes you have a lot of Fed speakers. So you always want to be aware of this. And we post this every single morning in our Discord. So we're all aware of what is to come for the week ahead. And, that's something that you should definitely be aware of yourself. So that's the earnings. That was the economic calendar. And then we go into what I call our compass, okay? This is the S&P 500 ETF. This is the SPY. Top 500 companies make up the S&P 500. So this is something you're always going to want to be keeping a very close eye on. Now, when I'm looking at this chart, this is the type of stuff that I see. On Thursday, because Friday was closed for Good Friday, on Thursday you have a massive bearish engulfing candle. That means from the top to the bottom engulfs the day before. Now, this candle the day before was a bullish engulfing candle from the day before that. So if you are trying to trade this choppiness, it's very difficult. One day we're all green, everything's looking good. The next day we're all red. Now, this is where I like to look at volume. When you have higher volume on the red days than the green days, that tells me that the overall market is just, there's more sellers than buyers. You have, very low volume here when we were on the run up, and then you have high red volume, selling off, which suggests that you have institutional selling, which this is a distribution day. So anytime you're down by more than 1% and you have higher volume, selling volume than the day before, that's a distribution day. That is not good at all. We're currently sitting right here, at this previous support. I mean, we're below the 50. We're below all the moving averages. Very, very weak looking market at the moment. But I think that this market is just trying to wait and digest where the earnings are going to be. So on this one, when we pulled away from the bottom here to the top, that was about 10%, okay? About a 10% move. Now, where we closed on Thursday from the high here, well, that's about 5% of a retracement. So we've retraced the move 50%. A lot of times that could be an area where we see a technical bounce. I don't know if that's going to happen. This close on the SPY, well, that was the lowest close in about 3 weeks. Since March 18th, that was our lowest close. So that's a pretty steep pullback, but it is consolidating here. So we'll just have to wait and see what the earnings show and what the week ahead shows. But that's the SPY. Now going to the Qs. This is absolutely key right here. Right here, this low that we closed at, which, was the low of the day and a low that we haven't seen again since that March 17th area, that's sitting right at support. But when we made the video last week, which was right here, this was the day of the Sunday video. I said, if we break this 50 moving average, it's going to be very difficult, area. We wanted to see a bounce because we had closed right at the 50, but we gapped down and then just could not get any buying strength at all. You had another distribution day here on the Qs, so that's a big bearish engulfing candle. You really don't like to see those if you are bullish. So that's, right now, and I'm going to show you the stocks that really make up a big percentage of the Qs. They're all sitting in the same area. So this earnings season is just going to be so key. I can't say that enough. So that's the Qs. Now we're going to take a look at the Russell 2K. This has trouble at the 50 and is having trouble at the 20 EMA. Very clear resistance here. Until this could get over the 50, I can see this coming back to 190. It's as simple as that. This has to break over that 50, which sits at about 201. Looking at the Dow is holding up a little bit better. So this is currently over the 50 moving average, which is better than, the other indexes, which relatively speaking is showing a little more strength. And it looks like we're in a bit of a wedge here. So it's consolidating. Which way will it break out? That's anybody's guess. You have the 200 here at 350, but we do have ascending support. So we'll see if this can possibly break to the upside. If not, it's going to come back down to this 10% correction area. But the Dow seems to be outperforming just a little bit as far as the major indexes go. All right, so a couple of other things that I wanted to show you guys here is the trades that do very well in an inflationary time is energy, healthcare, and obviously the gold, the miners. That does really well. That's where a lot of money flows into. So the XLE, I had posted this on January 1st, okay? You can see here this dotted line, that's the start of the new year. This is where I posted it. I believe is going to have a great year. And this was because that I knew inflation was a major issue, and I know where people put their money during inflation. So if we look at that now, XLE has taken off to the moon. Literally the day that I made that post in our Discord, it's gone from 55 to 80. That is a straight line up. Now, when it gets up to this level, I find it very difficult, to buy up here. It's obviously very extended over the 50, over the 200. So it's not something that I would be buying up here. But if I bought it here for a swing trade, like we posted, and hopefully a lot of members took advantage of that, you're sitting on a beautiful gain while the rest of the market is diverging from you, going down, okay? Other ones that are diverging from this overall market, if we look at the ETFs, which I always like to look at these ETFs every morning, you have the metals mining here, like we had just talked about with gold, diverging. We have straight up, just straight up. Huge breakout last week on that. And then we have the healthcare. So you had energy, healthcare, and the miners. These are the ones that outperform. You see this one is in a channel going up. So this would be a decent spot to get in long. If it breaks down this channel, then most likely it's going to come back down and retest the 50 moving average. So right now, this is the stuff that I'm looking at. I want to see things with relative strength to the overall market. So healthcare, energy, and gold right now are outperforming the rest. Now, I also have some stocks that I would like to look at here, but I just want to show you guys some of our picks here this past Sunday. AMD. This is one, I made a video about this one on Monday or Tuesday, but this was from our weekly watch list. It was setting up in this descending triangle for the move down. So if 100 broke, it's puts all day long. That means we're buying, expecting this to keep going down. And I'll show you guys an illustration here that makes it a little bit easier to understand. This is the perfect setup for exactly what AMD looks like. And that's what happened. And I'll show you guys right here. AMD just did exactly what we thought it would. And now it closed at 92. So this is a great trade. I actually did a very good job. And that trade recap is a couple of videos ago where I made just about 100% on the options contracts by taking that trade south. And that's really, I mean, look at this candle on Thursday. That is a bearish engulfing closing at the low. Very, very weak chart. This chart is now broken. Where will there be support? I think you can say there may be support around the 85 and then around the 80 mark. So that might be something that we want to mark off here. 80 and around 85. But until it hits that, I don't really see much support by where this is closing at the moment right now. So that's why that one was on our watch list last Sunday. Another one was Microsoft. This was from our Sunday watch list as well. Microsoft closed under all moving averages, very bearish. If this goes down, so does the market. Well, that's exactly what happened. Microsoft went absolutely down into this demand area, I guess you would call it. We have to see every time it's come down in here, it's really spiked back up and it has earnings. This is what I'm talking about. A lot of these charts are coming into very important areas right where you have earnings. And Microsoft does very well most of the time with their earnings. So, we'll see what happens. But as we alerted this at, 296, 297, it closed at 279. That's a huge, huge trade down. Just showing these, because I post these on our weekly watch list on our Sunday picks every single week so that we can all take advantage of some of these. Obviously, do your own due diligence, but this is just some of the stuff that I'm looking at. So let's go back into this. I want to show you guys, these are going to be some of my picks for the week. I have Target because I like that Target is breaking out. Target is diverging from the rest of the market. Target has now closed over the 200 moving average. This could not do it these days, okay? And then got a nice boost right through it. And you're seeing heavy buying volume. You see these big green bars down here. You see the relative strength looks totally different than the overall market. I'm really liking Target to continue a move higher, especially that it broke its 200 moving average. This was a great breakout of this area. Target, that's why it's on my watch list, because it's diverging from the rest of the market. It's a great company. I think its PE is 15 or 16, not bad at all. My second stock for my watch list is Crowdstrike. This has been a great, great stock since the tanking that it saw with the rest of the market. And now this one started to diverge from the market. This looks like the opposite of what the market looks like. So you had the two highs and then you had the move down low. Well, this one is breaking to the upside. And it just broke some key resistance areas here, including the 200 moving average with this huge green bar, and has now since pulled back. So what I would be looking for on a trade like this is to try to get an entry as close to 230 as possible. If this pulled back to previous support, which was resistance, should be support, I would be looking to enter this right around the 200 moving average for potentially a higher move up. So this one is on my watch list because we broke some key resistance. All right, so the third one on watch is Apple. Apple, we saw a beautiful move. We've retraced, most of that move now. Not most of it, but about 50% of it, just like you saw with the regular, the Qs and the SPY. This had a nasty, nasty bearish engulfing candle, closing under the 50 moving average. I think this one is definitely going to see this 200 moving average at some point, if not 160 area. And if that happens, this has such a heavy weighting on the overall market. So that means that the market also, the Qs will break that level. So that's why you got to watch these that carry these big weightings like Microsoft, Apple, Google. But this has earnings. It has earnings in 2 weeks. So, this is why, like I said, earnings is going to be very, very important. And while we were on that, let's look at Google. This one's not on my watch list, but it's something that we need to be aware of, because with this one, if this breaks 2,500, that means that the market is going to be really not looking well. Now, over here, we had called the break of these levels, the 50 moving average, that we may see 2,500 again. And I think that was about a week and a half ago. So that was a good call. But when we come back down and we hit these levels too many times, this would be like a fourth time hitting it. Sometimes they crack, okay? Sometimes you'll see a bounce, but you have earnings. Google usually does very, very good with their earnings. So once again, we're at key critical levels that translate to the overall market. With earnings coming up, we're going to have to see how this all plays out. So here we go. Here's another one on my watch list. This is going to be on our Sunday picks. Right here, we're looking at Chewy, okay? What does this look like to you? Very similar pattern that I had just showed you about 5 minutes ago with AMD, right? So if we pull up this here, this pattern that AMD looks like, well, that looks like a very similar pattern to Chewy. All right, this one is making a series of higher lows, so lower highs, I'm sorry, for the year. You have lower highs, and you're coming into this area here for a fourth time. Will we break back to the upside, or will it break to the downside? That's why you like to wait, especially for trades like this. If it breaks 36, that's the time to get in for those puts, especially on a retest. So if you pull down, you retest that 36, and then you take it short to go for puts. That's exactly what we did with AMD. And this is why Chewy is on my watch list right now to see if this level breaks. But that 36, 37 area is going to be very, very key. And then we can look at Nvidia, because most day traders are trading this one. This is coming into a demand zone. Every time it comes down, what that means is there's demand at this level. But if 208 breaks, this has a really broken chart if that happens. And this is why all these big stocks are all at these really, really key levels. And that is going to determine whether we see this go back down to previous lows. If those stocks that I just showed you, like Apple, Nvidia, Google, if those break, so does the Qs. All right? The Qs break down. That means that those other stocks are. That's why I always like to look at the overall picture, the overall market, to get a better gauge on where we may see. But like I said, earnings this week, next week are going to be key. So, keep your eye on it. If you're going to trade, be careful, manage your risk, kind of let these things play out and see what the companies say about their future growth, and then see where the valuations are going to be. So that's it, guys, for me. Please hit the thumbs up, and I will see you back on the next one. Take care, guys.